Welcome to the Explainer. Today, we're going to walk through a documentation of a market cycle step by step. We'll be looking at a unique geometric system called market DNA. So let's jump right in and see how it's documented. So what you're looking at here is the market DNA method. The whole point of this explainer is to follow the visual documentation of one of its cycles. We're not analyzing or predicting, we are simply observing the recorded events as they happened. So, what is this market DNA method exactly? Well, it's defined as a proprietary geometric system. But, what's maybe even more important is to understand what it is not. It doesn't use any traditional technical analysis, no fundamental analysis, and no quantitative indicators whatsoever. Okay, here's our roadmap for this session. We're going to start with our case study, which is a cycle in copper. Then we'll dig into phase 1. That's the entry and the initial plan. From there, the documentation shows a jump to phase 3, when a key level was reached. Then we'll look at what the model documents as the next potential phase. And finally, we'll wrap up with some really important disclaimers and rules. All right, let's get right into it with our case study. We're going to be observing the documentation of a single market DNA cycle for the asset copper, following the record from its start to a major milestone. So the asset in focus, as I mentioned, is copper. And this specific cycle has its own unique identifier, copper_2_3. This little detail is actually pretty important because that ID is what allows for precise tracking and public verification of the documentation. And here's where it all begins. Phase 1. This is the entry and plan stage. The documentation for this phase starts on a specific date, February 17th, 2026. This is our baseline, setting the initial conditions for everything that follows in the cycle. And here is our first look at the model on the chart. This is the snapshot from that day, February 17th. You can clearly see the price action for copper in relation to this predefined geometric structure. This is the documented starting point, our ground zero for this cycle. Now, the plan that's documented in phase 1 defines two different potential entry levels. You've got the primary entry, which is labeled M, set at 5.7177, and then there's a secondary entry, labeled P of C, at 5.5392. Both of these are part of the initial plan right from the very beginning. The plan also lays out a really detailed risk preview. You can see it's all based on a hypothetical capital of $100,000, with a maximum allowed drawdown of 5%. This leads to a total position size of 0.56, which is split into two equal trades of 0.28 each. And you can see other key parameters are also defined right here, like the 32-day trapezoid time duration. It's all part of this initial plan. And just so we're crystal clear on how those trade sizes are worked out, the source material includes this mandatory statement, and I'll read it to you verbatim. Both trade sizes are calculated using the hypothetical capital, the investor's maximum allowed drawdown, the third triangle domain percentage, the risk coefficient, and the contract size. So here's a crucial point. The exit plan isn't something that's decided on the fly. It's also predefined right from the start. The documentation shows 3 distinct price targets. Target 1 is the mirror line at 575. Target 2, called a safe exit, is at apex N at a price of 594.15. And finally, target 3, the full exit, is at the trapezoid top at 6.0825. Okay, so what does this plan look like in terms of potential returns? The model documents 2 scenarios. In scenario 1, if only that primary M entry gets triggered, the expected return is about 1%. But in scenario 2, if both the M and the PC entries are hit, the potential return is just over 2%. And you can see the annualized returns are also calculated based on that 32-day cycle duration we saw earlier. All right, now we're going to jump forward in the timeline. We're moving ahead to the documentation from March 10th, 2026. This date is significant because it marks the completion of phase 3, which is when the price reached the N level. And this chart illustrates that event perfectly. This is the chart from March 10th. As you can see, the price has moved up and made contact with that point labeled N. What's interesting is that the documentation shows this happened before the price touched the mirror delay line. And that specific price level that was reached at apex N, it's 5.9415. If that number sounds familiar, it should. It's an exact match for the predefined target 2 from the initial plan we just looked at. So let's just quickly summarize what the documentation shows us here. The position that was opened at the primary entry, level M, has now officially hit its second target, apex N, And according to the model's rules, this event means phase 3 of this particular cycle is now complete. So, with phase 1 and phase 3 now documented, you're probably wondering, what happens next? Let's take a look at what the model's documentation outlines as the potential next steps for this specific path. This cycle is a great example because it followed what's called a 1 to 3 path. So the question becomes, what does the model's documentation say is the next phase in this kind of sequence? Well, the documentation is very clear. It states that from this point, the sequence could go to one of 2 different phases next. It could be phase 2, which is defined as mirror contact, or it could be phase 4, which is the cycle's completion at the top of the trapezoid. Again, we're just observing the documented path, not making any predictions. Now, before we finish up, it is absolutely essential that we cover the disclaimers and the model's rules. This information is a mandatory part of any market DNA documentation, so it's really important to pay attention here. Please take careful note of these disclaimers. First, and most importantly, nothing you've seen here is financial advice. These analyses are purely for documentation and public verification. The model strictly prohibits using leverage above 10. You should never, ever invest essential personal funds. And finally, any risk management has to follow the provided instructions to the letter. And that concludes our documentation of the copper 2-3 cycle, from the initial plan in phase 1 all the way to reaching a key target in phase 3. If you want to see more documented case studies like this one, you can always visit the Market DNA Edge website. You know, this whole walkthrough raises a really interesting question. If a market's path can be documented with predefined geometry, what does that really imply about its underlying structure? Something to think about.